Good evening and welcome to another edition of the ShadowTrader Video Weekly for Sunday, February 13th, 2022. I am your host, Peter Resnicek from ShadowTrader.net. The title of this video is called The Autopsy because an autopsy is something that you do to try to figure out why somebody may have died, or using that term a little bit more loosely, we often say we want to perform an autopsy on something to figure out exactly what happened. And even though we're not in any sort of a crash situation in the market, there's been some really weird action, for lack of a better word, over the last few days into the end of the week that just passed. And I thought it would be good in this video to kind of look under the hood and see what's going on, what's causing that, and then where we might be going from here. So in the beginning part of this video, I'm going to blow it up for you shortly, but we're going to focus just on this area in the SPX Daily, which is the last three sessions of Wednesday, Thursday, and Friday. And in the bigger picture, why this is important, obviously, is because the big trend line break to the upside, which essentially broke the downtrend that's been happening all the way from here, from early January, was actually broken this week. And you can see it right here on Wednesday's bar, the big green bar that actually closed very strongly up above the trend line. This is a buy signal to any technician out there. I mean, basically, it is what it is. We talked about this last week in terms of fundamental analysis and reality versus unreality, right? If you recall from the prior video, I was talking about that trend lines are undeniable. You can't really say, well, I think it's going up or I think it's going down. If it's broken trend, it is no longer going down. But it only lasted one day. We did get what I call a confirmed close above, meaning that the daily bar closed above and the close of the bar was well above the trend line, but that action was negated since then. As you can see, I'm speaking to you from about midday on Friday, and we are continuing to move lower. So let's take a look now inside at a shorter term chart into this choppy area to get a handle on what exactly happened this past week. All right, breaking it down a little bit on this 15-minute chart of the SPX. So you can see here, this is Wednesday, where everything is hunky-dory, for lack of a better word. We get a trend line break on the SPX, and now the trend is broken, and the whole world sees it, especially those who are paying the proper type of attention, and now the downtrend is over, which brings us into Thursday and Friday. And what happened on those 2 days? Two things specifically which are really important. Firstly, on Thursday morning, you can see it here on the big gap down in the SPX, we get the CPI data, which is Consumer Price Index, as a measure of inflation. Everybody is thinking that it's going to come in at 7%. But it comes in at 7.5 and the market gaps down big. Why? Because obviously that going forward makes everybody think that the Fed is going to be more hawkish and may actually raise rates faster and harder than was previously expected, and the market doesn't like that. But what's very interesting about this Thursday morning and very noteworthy, I thought, is that there's no follow through on the open, and you actually rally like crazy for the entire morning session all the way up to Wednesday's highs. Again, probably sucking in a lot more bulls, but they would have been right because it made sense, because obviously you take back that overnight gap weakness and you go to here, and then again, we're just kind of cruising along, and then right in here, about 1 in the afternoon or so on Thursday, what happens? One of the Fed presidents, Mr. Bullard, who ought to change his name to Barrard, probably, he puts out some very hawkish comments saying, we're looking for more hikes, we're looking to raise faster, I want to see 100 basis points by a certain date, I think we should go, 50 at a time, blah, blah, blah. He's basically just spraying it out there and throwing out all kinds of hawkish comments. Obviously, the market can't stand that at all. Boom on Thursday and follow through on Friday as we move lower, right? So that's the rear view mirror look of why we had a failure of trend line break, which is interesting because it doesn't often happen. Usually on a longer term chart, when you look at a daily spread out over, say, 6 months, 9 months, or a year, when you get a trend line break of a trend that has been in place for a while, it will usually hold and start to move forward. But in this case, because of the comments that came out and how we were trading around that CPI data, it basically didn't. All right, so now let's go back to the daily charts and see where this leaves us on the S&P and Nasdaq 100 and where we might be going in the future. Okay, back to the daily of the S&P. And here's where things get really tricky in my book, why I think this is a really actually difficult market going forward for the swing trader, 2 to 5 day, etc. type of time frame, which I know that a lot of folks are, myself included. So S&P daily chart. On the pullback, which we were talking about in last week's video. If you recall in last week's video, I was making comments to the effect of that I felt that this pullback was very mild and we should go higher. And I was saying, if we break the trend, then it's off to the races. Markets should move to the upside. And again, as I was saying earlier, we got that for about a hot minute. That lasted one day on Wednesday. And since then, we've fallen apart. To say that the market is definitely going down from here, however, is a little bit more difficult call because there's still a lot of cross currents here technically that don't really support that 100%. One of the things that I'm thinking is the fact that when we came off this bottom and we rallied here to this point, if you look at the Fibonacci retracement, this is the 50 and this is the 61.8, which are, I should say, really the only key Fibonacci levels that I care about. I only look at the midpoint of moves and I look at the 61.8% retracement of moves because it is the golden ratio, as they call it, and I've found it to be effective. Notice where the pullback came in. We're not even close to the 50. So technically, you could make the argument that even though we had a false breakout on trend, the market is still strong because a weaker market would have at least pulled back halfway or maybe to the 61.8. So again, a little bit of a hard call. One thing that could be noteworthy is the fact that you do have somewhat of equal lows going on here. If you look very closely in this area here where we just pulled back a bit on the S&P, there are some relatively equal lows, like 1, 2, 3, 4. I mean, today, Friday, as I'm speaking, it looks like about the 5th session. You could easily say that. This is a balance area that I was looking at with my subscribers in Peter's Pre-Market Perspective pretty much during this entire period. And that's another thing that also makes this whole breakout and failure interesting is that you have kind of this 4-day balance area here that the market breaks out of. You break out of balance to the upside, and then the next day you fail. Well, that brings what we call the balance rules into play, which tell us that if there is a look above and fail and a re-entry into the balance area, then the target is always the low end of the balance area. And I'll just clean this up a little, but that would basically be this bar. It would bring us to here. So potentially, if you're going to be making the bear case, yes, you could say the market at least should rotate back down to the low end of the balance area there, and then it's just a hop, skip, and a jump away from that 50 MA. So maybe if we see some weakness this week, I'd be thinking at the very least retest the bottom of the balance area and maybe 44.09-ish, which takes us to that midpoint, and then we reassess the situation from there. And before I get off this S&P chart, I want to just point out one last thing is that you've got a trend line now obviously formed from the downside. In the same way that we drew our lines from the top, we obviously are going to start drawing them from the bottom. And notice that the end point right here, which is important, right where we're going to support, is very, very close to the bottom of that balance area. So again, could be tricky. I think if we move underneath the trend, obviously that brings in a little bit of downside momentum. But again, just breaking that trend is not enough because we've got to get down below that balance area. And as I was showing you in the screen before, you also have that 50% fib right there. So a lot of technical stuff is kind of going on. And in the bigger picture also, and this is just really what I'm about to say, I mean, it is what it is. I'm looking at charts here. It's not like really just my opinion, but I'm more like speaking from experience. I tend to have certain patterns that I will classify as what I call hard pattern to get lower out of. My subscribers know this phrase because I use it a lot. It's basically when I see a pattern that maybe when I was a less experienced trader, I would automatically short because it felt to me like it was definitely going down. But then after getting burned with that pattern so many times, I've come to have a better understanding of which patterns actually are short patterns and which aren't. And this pattern, because of what I was just saying, in terms of the 50% fib not being tested, and you've got the trend line, and you've got the bottom part of balance, etc. And just the way this whole thing went down, especially with breaking trend to the upside, being so strong, and then coming off on this news here, it just doesn't feel that obvious. Now, then on the other hand, just to play devil's advocate, the news that is hitting the market is really the most bearish type of news that there could be. What does the market not like? The punch bowl being taken away, right? We already had a market that was pricing in 5 rate hikes in 2022. Now we get these Bullard comments on top of this inflation data that came in hotter than we expected, and this could cause the Fed to move faster and harder than expected. So obviously the market needs to reprice itself for that. Shifting gears a little bit now to the Nasdaq 100, which in this rising rate environment is going to be even more in focus, I believe, than the S&P, because many of those more growth-oriented stocks, or as they call them, long duration stocks, right, which means that it's kind of a longer duration until they get to profitability. The term duration is a term from the bond market. It essentially means how long does it take me to get my money back, and so that term is sometimes applied to some of these growth type NASDAQ stocks that may have fantastic technology, but they don't yet have the revenue and the profitability to back it up, and therefore it'll be at a much longer sort of time horizon for investors. Those stocks tend to be getting really, really beat up more in a rising rate environment, as does the rest of tech, maybe to a little bit lesser extreme, but in general, tech is going to be a lot more sensitive to this rising rate environment across the board, and that's why this NASDAQ is going to be very, very important to be watching over the next couple of weeks. From a technical standpoint, not much different from the S&P, right? You have the same sort of trend line break, close, and then failure, and you've got your uptrend. You've got the base of the sort of balance area is there. As you can see, I'm speaking to you Friday midday. I was just saying we're pretty much there already. And you've got some nice open space. If you break down to the bottom of that balance area, you've got some nice open space to go before you get to that trend line. So a little bit of a kind of a hint. Weekly options advisory, I'd probably be looking at a QQQ butterfly targeting that area, something that I might be looking to put on this afternoon on Friday after I finish recording here, because it would make sense since all we have to do is get through that, that balance area low. That's going to bring in some overhead supply. If it does, again, probably a butterfly with mid strike in the QQQ targeting whatever this is in the QQQ. Obviously, we are looking at the index of the NDX, but it translates perfectly to the ETF, to the QQQ. If you recall from last week's video, what was my number one trade idea? It was Tesla. I said that I didn't really like the market all that much at the time, but I did like some stocks. I'm always very, very selective, especially in this particular environment, and I continue to be so. And I said that Tesla was my number one pick. And I purposely wanted to spend a few moments in this video going back over how I handled Tesla in Weekly Options Advisory, because obviously the stock went nowhere from the pattern that I was showing you. We'll get to that in a second. If you recall, I felt that it was very imminent for a large bullish breakout above approximately the 940 area. That never really materialized, but we didn't lose any money. So I want to just do a quick autopsy, I guess, for lack of a better word, on the Tesla trade here, and talk about how that went down. So basically, this is the trade here in general, and it'll be a little bit more clearer, I should say, when I show it to you on the chart. But basically, if you recall from the last week's video, I said that I had started the trade, meaning I had put on the put side and I had not yet put on the call side. And in the put side, it was basically a number of unbalanced butterflies at the 745, 740, 705 strike, which were bringing in a credit of 88 cents per unit, brought us a credit of about $500. And then later, after that, a couple days later, I bought the call structure as I saw the stock continue to keep banging up against that 940 area. I put the money into the call structure as I said I would, which was a little bit more expensive because I wanted the butterfly to be, or vertical rather, in this case, to be very wide so that we could capture a bigger part of the move. Tesla tends to be very volatile and can really get going. So it would not have made sense, for instance, to buy a very cheap vertical of, say, $5 or $10, or a butterfly, or some sort of structure like a ratio or unbalance. You had to go with something that was going to capture a bigger part of the move. So I took that $500 on the put side and I spent it on an $8 call vertical, cost $8.45 as you can see here, and it was the $9.50, $9.75. And this, of course, to me made perfect sense. Risk reward about 3 to 1, pay 8, pays out 25, and if we're breaking out above an area of a shelf about 940-ish, well, I want my long call to start just above that, all right? And as you can see, that was our net cost of about, say, $300. And after that, how did I manage to make this trade not lose money and get that debit back when we all know that the stock fell apart with the rest of the market and didn't go anywhere? Well, very simply, if you have the 950, 975 call vertical, you can sell the 975, 1000 vertical. And that leaves you with what? Leaves you with the 950, 975, 1000 call butterfly. And when I saw that the stock was having some trouble breaking through, I basically sold that call vertical for $335. And what does that do? As I said, brings our cost back down to zero. And from that point on, it didn't really matter to me if the stock rallied or not, because even though I was making a bullish bet to the upside, I was protecting myself with the put credit, which all went to zero. As you can see here on the bottom, we bought back some of the mid strike of that unbalanced butterfly for 4 cents, which is nice since we sold the whole structure for 88 cents. So that negated the downside risk. And then as we added that vertical on to the initial vertical, turning it into that butterfly, that brought the overall cost back down to nothing. And you can see at the end of the trade, even though Tesla failed miserably and the TA that I had worked out about the breakout over that sort of shelf in that area didn't happen, we didn't lose any money. And this is really, really important. I hope that those of you who are somewhat new to options will find this intriguing. Definitely come and check us out. Link is down below, shadowtrader.net/options. This is the way that I trade week in and week out. I am always constantly thinking about cost. Nothing is a binary outcome to me. Most options advisories, most options traders for that matter, they think of this as binary events. Well, I'll buy this butterfly for $1.20 and the most I can lose is $1.20. Or they want to make a downside bet and they buy a put vertical and they pay $4.75 for the put vertical, and they think, well, either the market crashes and goes through it and the put vertical turns into $25 or whatever, or it goes to zero. This does not make sense to me at all, because you are not using the full capability and power of what options can do. So I think it's very, very important to be morphing and changing your spreads and be a little bit quicker on your feet as you're going at the first sign of failure, which is really extra important in the options market. Because remember, if you have any structure on that you have initiated at a debit, okay, that means that that structure more than likely has negative theta. And every day that that stock doesn't do what you expect, you are getting hurt. And that's why this is a perfect example, in that I knew that my debit in the trade was $3 roughly, right? Because I brought in $500 on the puts, but then I paid over $800 for the initial call vertical of the 950, 975. So if the stock doesn't go anywhere, that $3 is going out into the toilet, right? I'm going to lose that $3 unless I scramble a little bit and change that spread a little bit, bring in some more credit, which, by the way, didn't bring in any additional risk. And this is very important, right? Because very often when you sell credit, you're bringing money into your account, but you are trading that money for risk. But if I'm already long the 950, 975, I can sell the 975, 1000 all day long, and I'm not incurring any upside risk. I'm just turning a vertical into a butterfly. So anyway, hope that's of use to some of you. These are the techniques that I use week in and week out with my subscribers. That's why we tend to not have really very many large losing trades at all. Most of our losing trades are break even or very tiny losers because we are quick on our feet, as I was saying, and we're working as hard as we can to adjust our spreads as necessary if we're in a debit situation. All right. So again, if you'd like to join me, get these trades live, sent to your phone, shadowtrader.net/options is, of course, the place to go, or hit that little button up in the corner, and I hope to see you there. And last but not least, as I was saying in the intro to the video, where is the sort of safety in this market, or where are the outliers where there might be an easier type of trend to follow? I can think of only two. And the first one is right here, which is XLE, of course, energy. If you've been watching crude prices, obviously they are reacting to the inflationary environment, and looks like we may be hitting the $100 a barrel level soon. And of course, energy stocks are responding in kind. And the main takeaway from this chart is simply that it is so opposite what's going on in the S&P, as I showed you the S&P daily. And when I say opposite, this is an important distinction to make. I'm not saying that because this chart is up and the S&P is down. I'm saying that because this chart is a very clean trend and the S&P is a very messy trend. As we were discussing, the S&P broke its downtrend to the upside, then failed miserably back to the downside. Now it looks like it wants to kind of scoot lower to that balance area low, but this chart is clean. It's been in a solid trajectory here from these lows in the beginning of the year, and it just hasn't stopped. So I'm thinking pullbacks in the XLE and XLE type stocks might be noteworthy. XOM is one you may want to look into for next week. Of course, ExxonMobil, that's one of the bigger names that actually has a little bit of a pullback going on, where it looks like there might be an actual buy point as opposed to a lot of the other names that look more like this index chart and they're just already sitting at the highs. So, case in point, I would be looking for any of those stocks in that XLE on pullbacks. I don't know that I'd be buying breakouts or at these highs, but I'm just pointing out an area of the market that is obviously acting different from the S&P as a whole and may have some opportunities going forward. And if you're an astute follower of the markets, you probably already guessed what the other sector is, which is, of course, financials, another sector that actually likes a higher rate environment as opposed to doesn't like it. And so this chart is also pretty clean. There has been some undulation here in terms of some back and forth here, but notice that since about here, which I would say is about mid-January, we've had kind of a solid rally to the upside. And what has that done? It's been 100% retracement of this recent down move, all right? And this would lead me to believe that pullbacks are probably buyable, obviously, because this particular environment that we are in, these stocks tend to like it. So watch that for a pullback. The usual suspects could easily be in play. BACC, GS, MS, et cetera, et cetera. The names. XLF is the ETF, and maybe there's some potential trades there on pullbacks. If I was to be looking long in this market, in terms of individual stocks, at this moment in time, I would probably only be looking at energy and financials and nothing else really. Let's finish on a little recap of everything we were discussing in this particular video and leave us with this all-important S&P daily chart. So, market having a lot of back and forth here due to jitteriness on potential Fed rate hikes coming down the pike harder and faster than expected. That's what we know from the fundamental picture, what's going on with the technicals. Again, we had the big sort of trend line failure that may have sucked in a lot of new buyers. I believe obviously it did. We retested that area again on Thursday, and since then have started falling hard. And now, as I speak to you, and again, this is Friday afternoon, midday, day is not finished yet, we are testing the uptrend line and also potentially, I think, going maybe below that line to the lower end of that balance area. Now, I can't stress enough, and I could be completely wrong about this, but I don't know if this market is all out bearish as of yet because of all those different factors that we talked about earlier in the video. Understand that for me and my style of trade, it doesn't matter because I take everything in small chunks. I do a lot of day trading. I'm flat at the end of the day. It doesn't matter to me what the market is doing in the bigger picture in that sense. And in my weekly options advisory and all of the weekly options trades that I play, I'm not ever playing for the big move that is out 2 weeks, 4 weeks, 6 weeks. I'm playing for the moves that are right in front of us that are going to happen in the current week's options expiry, options that are expiring in the current week. And that can be anywhere from, say, 10 days to 7 days to even as short as 1 day or 0 days. For instance, yesterday on Thursday, we had a great trade of a broken wing butterfly on the SPX for credit up at the top of this range that we were able to put on yesterday afternoon when we saw the market falling off hard from that area. To make a long story short, relatively low risk trade, 75-cent credit on a butterfly that we bought since it was broken wing, brought in 75 cents, and then by the end of the day Thursday, already buying those back for 25 cents or 20 cents, and then this morning on Friday, right at the open, closing the rest of the position for a 10-cent debit, right? So that's kind of the way that I look at it. Kind of take everything in small chunks. So again, I could be wrong about the technical picture here as it is, meaning that I'm being a little bit more tentative because to me, from my experience of many years, it doesn't look like a screaming short pattern. And again, just because of all those factors. If I'm wrong, well, we'll know that Monday morning or Tuesday, whatever, as we start to move lower before the trend line, and I'll jump on that train when it leaves the station at that point. So no problem whatsoever, all right? Thank you guys for spending a little bit more of your weekend with me. Really appreciate it. Everybody's been really supportive of the channel lately. We've had a lot of growth as well, which has been great. So I welcome all of you to the ShadowTrader Fold. Hit the like button if you can, and also subscribe to this channel so that you receive notifications whenever I post new content. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.